CLS Market Review. I'm your host, Todd Clark. With the recent market rallies, it's made the August downturn a distant memory. So let's turn some time over to Scott Kubie and Joe Smith as they talk about earnings and how they've impacted the performance of CLS's risk-budgeted portfolios.
Thanks, Todd. Scott, we often see fall mark, change in the seasons. What exactly are we seeing in terms of the markets?
Outside we're seeing red, yellow, and orange, but in the markets last week we saw green. The S&P was up a strong 2% last week, and technology stocks, which we have tilted our portfolios towards, were up over 4% on a number of strong earnings announcements. And also the markets were supported by some central bank actions. We saw the European Central Bank support the markets with some statements, and then the Chinese moved in with a more definitive interest rate cut.
What exactly is going on with China these days?
So China, they made a number of big actions. First of all, they cut their interest rates by 0.25%. They also reduced the amount that banks have to keep in the bank, and thus allowed banks to loan more to the economy, to people wanting to borrow, and also deregulated some of the banking sector, all designed to get more money in the hands of entrepreneurs who are more productive than some of the state-owned enterprises, hopefully boosting growth in China.
Now, I know in terms of where we were, back in August, China obviously drove a lot of that. What have we seen subsequent to that?
Nothing but really good increases in the market. Small caps, international developed, are up 5% since the bottom. The S&P is up almost 10%. And in fact, emerging markets have been, as you noted last week, really the strongest asset class, up 13% since the market bottom. It reinforces that idea: get a risk budget. Be prepared to withstand some ups and downs in the market, because the long-term benefits don't come to those who hop in and out, but those who stay the course over the long term, and that's what we really want to emphasize for investors.
Oh, great. Now, I know also you talked a little bit about beer. Could you expand on that?
Yeah, I was trying to drive the ratings up, and so there's a big merger in the beer industry. In fact, there have been a lot of mergers in the beer industry. So AB InBev, which AB is Anheuser-Busch, offered to buy SAB Miller, which controls the Miller brand, and together they have over 30% of the beer market globally, which is a huge percentage. The things that really interested me about this, one was they bought it not for the U.S. or Europe, but for Africa. SAB Miller was started in South Africa. They have a really strong African distribution, and that's where the hot growth market is. On the other hand, they're happily willing to get rid of the U.S. market because beer consumption in the U.S. is declining at a decent pace, and so it isn't really a strong market. And then getting back to ETFs, which we spend a lot of time talking about, this would make that the Belgium stock market, which is where AB InBev trades, would be over, that one company would be over half of the Belgium stock market. Wow. And so that varies with ETFs, are constrained in some ways, but it's one of the things that these mergers take place. We're always making sure that you have the right exposure and the opportunity to go, whether investing domestically or internationally, to get the best companies in your portfolio.
Yeah, great, Scott. Well, thanks, everyone. Tune in next week.